If you've been a viewer of my channel, I've talked about the final downward trend resistance line that we needed to pass. Hi everyone, welcome to Wealthy Mindset. My name is Oliver. Thank you so much for watching. I really appreciate it. I hope you guys are having a great day like always. In today's video, it's going to be extremely important. I highly encourage you to watch it all the way to the end. It's going to be short anyway, and because I'm only going to cover the high side. I'm not going to cover the low support levels. If you want to see those, definitely watch the other few, last 3 videos. Those support levels are still intact. The reason why this video is extremely important is because the levels we broke, the support levels we have, the way we're lined up, I believe we're going to start running up all the way till earnings, to be honest. And at least worst case scenario up to March 15th, because the pandemic relief bill is going to potentially pass on March 12th, if not March 14th, the latest. So I know BlackBerry does not move with the market, but at least that's a positive catalyst. And then I do this mainly by analyzing the graph. Now, quick disclaimer, like always, I'm not a financial advisor. I'm not a professional. And everything I do share with you guys is just my opinion. It is not advice. Do not buy or sell based off the information I show you or the opinions I do form. I've been holding BlackBerry for 6 years, long-term investor, and I do own shares in BlackBerry. That's what I'm trying to say. Definitely be biased. I might be biased, so definitely be critical when you're watching this video, because hypothetically I could be too optimistic, specifically in this video. Now, if you've been a viewer on my channel, you've noticed that there's an upward trend support line. This is logarithmic, by the way, and upward trend support line dating back since October 2020, came all the way through here, had a false breakout here. We could be going up to the upside, but the reason why I'm optimistic is because if I go to logarithmic view, we broke this downward trend resistance line that I'm going to elaborate on a little bit more. And if you're a viewer on my channel, you know what I'm talking about. Specifically, when I get into the details, you'll know. And this is the reason why I'm extremely excited. But one thing too, this line doesn't look clean because it's mainly for the algorithmic view. But if you look at the logarithmic view, it's going up, and hypothetically, it looks like it was the final drop to go to the upside. But what I want to show specifically is this downward trend resistance line dating back since 2008 all-time high. And if you've seen my past videos, you know what I'm talking about. This line that I talked about passing since December 1st, 2020, and then going past it, coming back down, back testing it, and skyrocketing to the January 27th, January 28th all-time high. Now, the significance of it relates basically to this. This is what I'm trying to explain, is in that those 2-3 videos that I've talked about this line is once we pass a major downward trend resistance line that's taken for years, the run-up usually is minimum 6 months, if not a year, 2 years, and I've seen 3 and 4 year run-ups. And if you count since December 1st, 2020, the run-up has not even been 6 months yet. So you have this upward trend support line, this catalyst to be running up for 6 months minimum, by the way. So it could be a year, 2 years, but minimum 6 months. Plus we have the algorithmic upward trend support line intact, and then the final one. So if you've been a viewer of my channel, I've talked about the final downward trend resistance line that we needed to pass back when it was at roughly trying to get to $12.50 right about here. Now the thing is, because we've taken a while to get back up to it, the support or the resistance level that we needed to pass gets lower and lower. So we've passed it, and here's the bottom that we had that recently, about the 882. We formed an upward trend support line for it. Now it only looks like 2 touch points, but it's more. If you've seen my past video, if you go to a 5-day chart, there's multiple touch points, so it's an actual upward trend support line. Plus we have another upward trend support line right here that's still intact, and even if we did break it, we have this upward trend support line. If I extended it, we would fall back to. We're above both moving averages, MACD lines in the positive. We have almost basically everything intact, where this was the last downward trend resistance line. We broke through it. I don't see anything else stopping us besides horizontal resistance lines. Now, I'm not going to go through all the upward trend resistance lines because I apologize, I do not have enough time. All my other videos, if you just watch them, the upward trend resistance lines, most of them are horizontal. That's the ones that you need to look for. Those ones are the ones that are still intact. The downward trend or the upward trend ones, are not necessarily in play, mainly horizontal. So I'm going to go through a few. Essentially, the 1150 is still in play. The $12 and $12.50, but I would be more concerned about the 1150 around maybe 12.26, 12.30. The next ones are about the 13 1340, 1350, 1336. After that, you're looking at the low 14 level, 1420. The main one, so there's a reason why I'm going through these levels. The main one is once we pass the low 15s, it's like 1509, 1516, I believe. It might be a clean 15. Once we pass that, we are good to go to get back up to the 16, 17, 18, 19, $20 like price point that hopefully you guys know if you've invested in BlackBerry since, I would say beginning of January, somewhere around there, we would be around that level, specifically 17, 18, 16, around there for the most part. So I'm optimistic for that. It could be a run up all the way to earnings, and I know that's a big statement, but I don't see anything stopping us except horizontal levels. Now, the only thing is, though, keep in mind, going up to earnings like that, I think is going to be good, and I'm going to release a video explaining why I think it's going to be a good earnings report in terms of potentially being a surprise. But I don't know if the numbers will justify enough for the stock price run up in terms of the professional analysts. The professional analysts already say that like sometimes the run up is already too much, the numbers don't justify it, etc., etc. But like I always advocate, definitely do your own research to know why you're buying into a stock. And not even just that, in terms of stocks, the way like I mentioned in the past, stocks are for future growth. Like if you're buying a stock right now, you should, like in my opinion, you should not be buying a stock based off the earnings they're earning now. You should be buying it towards of future expectations, because you're trying to make money for the future in a way, if that makes sense. So given all those catalysts and everything, I think overall we're doing pretty fine based off the downward trend resistance line, breaking it. I don't see anything more in sight, and the way it's lined up is just literally perfect, where I think we'll be seeing $15 relatively soon. Like that's my opinion, by the way. So that's pretty much it for the video. Thank you so much for watching. I really appreciate it. If you do like videos like these and stocks overall, finance, mortgages, credit scores, passive income, definitely consider subscribing so you'll be notified the next time I do upload those videos. And if you do like the video, definitely drop a like. Thank you so much for like overall support. I really appreciate it. And if you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. Thank you so much, and I'll see you guys in the next video. Peace.